it mean for the New York market when trade deals are inked between the US and other countries, in this case with India?
Well, I think in general, they're viewed positively by the New York market, basically because if there's more trade to be financed. And New York, for a long time, has been financing trade, going back to the cotton trade in the early 19th century, financing international trade. Britain was much bigger in financing that trade, but New York had a part of it. So I would say that the more trade, the better from the point of view of, and I just mentioned how New York got to be a major financial center partly because its harbor was so good and so it was a leading port of the United States. So more trade, the better for the financial markets. And I would say that the stock market, which I think is more elevated than it should be, seems to react very positively when news of these trade deals come up. And you had a second part of your question.
They tend to become smaller and smaller, the trade deals. They become limited trade deals. Either way, how does that affect the system? How do traders, brokers, the entire system, how do they react to these deals? Are they looking at specifics? Are they looking at sentiment? What have you seen over the years?
Well, sentiment is important. I think that basically people like the freer trade, the financial markets like freer trade. It's not only financing the trade moving back and forth in the short term, but it's also the more trade and the more interactions countries have, the more international investments take place. And of course, New York specializes in issuing stocks and bonds. Wall Street serves large American corporations. Large American corporations have strong presences in many countries overseas, and they would, in a place like India that you're from, they would like to have even a greater presence there because, after all, India is, it's almost as big as China in population now. Some people say it's going to pass China, and the Indian economic development hasn't quite equaled China's yet, but there's a great potential there. And so the American corporations that are financed by the American financial system are looking to do more business in places like India, and that's good for the New York market as well. Now, in terms of the trade deals, I think there's been a change under the current administration. I mean, the old idea was to have kind of like NAFTA, a trade agreement for all of North America, and the European Union, of course, had its own view of trade and was kind of free trade within Europe, but barriers to outside stuff. So that led a lot of American corporations to establish beachheads in Europe. I would say that Wall Street didn't like the current administration's policies. And frankly, as an economist, I have to say that in some sense it doesn't make much sense. That President Trump is terribly worried about our trade deficits. I view our trade deficits as a sign of strength. That is one reason, there are two ways of looking. A lot of economists look at trade, the goods, the ships going back and forth, carrying the cars and the TV sets and the grain and things like that, the soybeans. And they say, well, that's what's really important, and the trade deficit is just a spin-off of that. But you could look at it another way, and this is what my history of watching foreign investment come to the United States, that maybe the finance is more important than the trade. And if we like our big companies like Microsoft, Apple, Google, and so on, Tesla, we mentioned that, very innovative companies, foreign investors like them too. So maybe we Americans have to run a trade deficit in order to allow people in other countries to get the dollars to buy our stocks, which after all are stocks and bonds, which are priced in dollars. So maybe it's not economic trade is the dog and finance is the tail. It might be, in our modern world where finance is very important, that finance is the dog and trade is the tail. Now, I would say that our president doesn't quite understand that. And so he thinks that trade should be balanced between all countries. Bilateral trade should be balanced. Like part of the deal is he doesn't like India having a trade surplus with the United States. Of course, China's trade surplus is much greater, and so is Japan's. But if from the point of view I just mentioned, maybe that's not so bad for us. I used to say, in the days we used to worry a lot about Japanese trade. We're getting all these Toyotas and Lexuses and that, Sony TVs coming in from Japan, and how are we paying for them? Well, the Japanese are buying things like treasury bills and treasury bonds, so their holdings of US government that go up. And I say to myself, you know, who's getting the better part of this deal? The Americans are getting Sony TVs and Toyota cars, and we're giving Japan pieces of paper. Does this show you how much Japan is exploiting the United States? No, if you think about it, it's really a pretty good deal for Americans. Of course, we have to pay the debts back someday. We don't want to forget that.
Thank you.